But while there will be lots of focus on NVIDIA earnings next week, we are taking a look at the bigger chip landscape today. The group as a whole is positive on the year, but that doesn't mean every stock is in the green. While Intel has seen its stock surge nearly 25% on acquisition reports, Skyworks is down 25% so far this year. Joining us now to help make sense of this sector is Christopher Danley, City Head of U.S. Semiconductor Research. So Christopher, let's start there. We've seen a lot of dispersion within these semi names. So how are you advising your clients to really kind of parse through all these various companies and really what the market is telling us right now?
Sure. So first of all, we start with the cycle because the cycle determines largely the movement of semis overall, and we're still positive on the cycle. When it comes to, say, an Intel or a Skyworks, Skyworks lost a major design win to Broadcom, so that's what's weighing on them. It's in an area that's commoditizing, so we don't like Skyworks. Intel, like you said, has really bounced hard. I think a lot of that is short covering, to be perfectly honest. I think Intel's been one of the more popular shorts out there in semis. And then whenever you introduce some unknowns, such as breaking up the company, government's getting in there, the shorts just sort of back off and say, hey, I don't know what's going on here. I think that's largely what's happening there. But as far as the space goes, like everybody else, we're still very, very positive on everything AI. So that's NVIDIA and Broadcom. But also, I think you're seeing other parts of the sector that have been, down in the dumps for the last couple of years, like semi-equipment names, like Applied Materials and Lam, or the analog space, which has done absolutely nothing for the last couple of years, is finally showing some signs of life. I think that was the most important new development that came out of earnings. We upgraded one of those names, NXPI, earlier this week. We upgraded a couple of them throughout last year, Texas Instruments and Microchip. I think that's going to be one of the bigger surprises this year. And we're saying to investors to allocate like new dollars over to the analog names.
And where are we in that analog cycle that's leading you in that direction, Chris?
Sure. So a couple things. If you look at the the margin trajectory of these analog names, unlike say AI, where margins for those companies are at all-time highs, for the analog names, they've largely fallen anywhere from 10 to 15%. Take a company like Texas Instruments, for example. Their margins have fallen 15%. That's the biggest decline in their margins since the global financial crisis. Obviously, it doesn't happen that often. Also, if you look at the revenue for the analog companies, it's down on average 30% from the peak of a couple of years ago. So clearly, you're trending below consumption there. We're starting to see some signs. We've had multiple companies talk about their bookings increasing from a variety of sources across the board, distribution, direct customers. So that space is pretty much at the bottom, and you're starting to see some signs that it's coming back. As a result, you're also seeing some of the stocks jump rather sharply over the last couple of weeks. A lot of them are up like 10, 20% in the last couple of weeks. But if you're buying them here at the bottom, 10, 20% is nothing. Texas Instruments, that's our top pick there. Another example, we think earnings can go up literally 100% at Texas Instruments. So wow. We could be really at the beginning of a multi-year upturn in analog.
Chris, I want to get your take on a potential breakup of Intel, because you seem to have a more bearish take than at least some of the investors do, considering that huge surge that we saw following that report. Why don't you think a breakup of Intel would be in the best interest of shareholders?
Sure. So there's a lot of synergies. Basically, the proposal is separate Intel into manufacturing and then the design of the chips, right? So there are a lot of synergies. And the analogy I would use is building a semiconductor is like building a house, right? It takes 3 months to make a semiconductor. There's a lot of layers. There's a lot of steps. And so the design and the manufacturing is like the architect and the contractor. Probably in your best interest to have the architect and the contractor working closely together. It's the same thing with the designers of the chips and the manufacturers of the chips. I know, several people that work at various semiconductor companies, let's say on the design side, and they're always like going back to visit the factory as they are manufacturing these chips. So I think if you break up Intel, you lose a lot of those synergies, and it's going to hurt the company. I think that if they want to sell off some of the non-core aspects like an Altera or Mobileye, that's no big deal. But I think you do need to keep the core businesses together.
Well, but at the same time, Chris, I believe you think that they need to get rid of the so-called merchant foundry business. In other words,
Right.
I think what you're saying is they should keep making their own chips and working on that process, but they shouldn't necessarily be manufacturing chips for other people. What happens to that business then if it's not, a TSMC or someone who buys that? Or could that be a potential outcome?
Yeah, that's a great point and a great question. So we have this like top 15 rules of semiconductor investing, and one of those is it's an axiom and just in tech investing overall that tech companies and semi companies are generally good at like doing one thing really well. And if they try and get outside of their core competency, it tends to meet with failure. Intel is fantastic at manufacturing leading edge microprocessors. They've been doing it for 50 years. If you get outside of that, they've been trying to do merchant foundry, making chips for other companies for the better part of 20 years. And it hasn't worked for 20 years. They bought a company, Altera, about 10 years ago. So they own Altera. They've owned it for 10 years. They still can't make Altera's chips. Altera is still making them at Taiwan Semi. So it's not like, I'm pulling this out of a vacuum or something like that. So I think if they do get rid of the merchant foundry business, it's not that big a deal. They don't really have much of a business there, right? So you can just shut it down or spin it off. I don't know if they could sell it, but really it's a fairly small business. The biggest part of it is the billions of losses that they're having every quarter. You shut that down. We've done the analysis. You have a path to $3 or $4 in earnings. That's a $50, $60 stock. I think it's great. I think Intel holders should and would love it. And, in all fairness to Pat Gelsinger, I think Pat had them on that track back to drawing at least close, if not even with the competition by the end of this year. Now, I think his sort of fatal blow was he was still pursuing the merchant foundry business and it was killing him. But I think, Intel has a solid chance at getting back in manufacturing now that Pat's gone and they've had some other high-level defections. That path to recovery is now in jeopardy, unfortunately.
Yeah. Well, Chris, it has been a fascinating story to watch, certainly. Thank you so much for your perspective. Appreciate it.
Happy, have a good weekend.